afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi, and it's a clear Friday cheer for the market at this point of time. 18,500 on the Nifty. Almost that's what we are staring at. It's the highest level that we have seen in 2023 so far. So Nifty scaling fresh 2023 highs on an intraday basis.
Reliance, Anisha.
Yeah, 2 to 3%.
Yeah, 2.5% higher for Reliance. That's contributing, I think, maximum to the index gain.
True that, given the weight that it carries. But not just that, the FMCG index is at the record high level. Ditto for auto index as well. And even Midcap 150, Midcap 100, all are hitting all-time high levels today. So there's a clear green on the market at this point of time. And there's a bit of a green on Info Edge stock as well. The stock, of course, had seen a bit of a tumble on account of that exceptional one-time hit that the company has taken on account of impairment. But looking at the internals, we are seeing a bit of a spike on that counter, sitting with a gain of around 3%. Let's try and understand the internals. We have with us Mr. Hitesh Oberoi, the MD and CEO at Info Edge, joining us on the show. Hitesh, hi, thank you so much for making time and speaking with us. Well, the growth rate in recruitment business has tapered a bit. Of course, it's better than expectation because IT hiring was expected to impact your numbers by a whole lot. But nonetheless, do you expect this softness to continue throughout FY24?
You're right. Billing growth has taken a hit because of the slowdown in IT hiring. The non-IT hiring market continues to be solid because that's more indexed to the domestic economy, while the IT hiring market is more indexed to the US economy. And IT hiring has been slow for almost 2 quarters now, and we expect it to be slow for another 2 quarters at least. Hopefully, things will start recovering by Q3. But it's difficult to predict what's going to happen going forward. The non-IT market continues to be rock solid.
Net basis, if I could ask you, should we expect a double-digit growth in the recruitment business, 10 to 15%, or could it be single-digit?
I don't know. It's very hard to predict. IT hiring has been slowing down for a couple of quarters. The last quarter was slower than the previous quarter, so it's unclear whether we hit the bottom. Hopefully things will get better in the second half. Internally, of course, we'll try and aim for double-digit growth, but it's hard to say how things will pan out.
Hitesh, tell me, what is this one-time exceptional loss of 97 crore rupees that you've incurred?
See, there are lots of these exceptional items because of the fact that we have a lot of investments in a lot of companies, and some of these investments are marked down. Sometimes they're marked up. So this extraordinary loss which you sort of see is perhaps mostly on account of some of these, because we have a lot of investments in over 40, 50 companies, and they are often market. We sort of impaired our investment in broker network some time back. So some of these sort of things happen every quarter.
Okay. I'm just looking at the consolidated EBITDA margins as well, Hitesh, and they've also slipped down on a sequential basis, about 132 basis points. Was it the marketing that impacted your margins?
Actually, performance this year has been very, very good. Not just the recruitment business, but also the non-recruitment businesses have done well. 99acres had a solid quarter. It generated cash actually last quarter for us. Shiksha was also profitable at the cash level. It generated positive cash flow for the company. Losses in our Jeevan Sathi business also came down. And Naukri continues to be very, very profitable. So Naukri last year had an EBITDA margin of 62%. So margins sometimes go up and down a little bit because of our investments in marketing, and they are lumpy. But otherwise, on the whole, margins improved substantially last year and improved in Q4 as well. Over last year, Q4.
Improved in Q4, but what about the coming quarters, coming years? Will that trajectory of improvement continue?
A lot will depend on billing growth in Naukri. If Naukri is able to grow at 15% or more, then our margins should hold. But if growth in Naukri slows down and we start hitting single-digit growth, then as a company, we would want to continue to invest in some of the newer areas where we see a lot of opportunity. Like we're investing in a blue-collar job board. We don't want to slow down that investment. We continue to invest aggressively in data science and machine learning and AI. We don't want to slow down that investment. We are, in the past, we've always seen that whenever there is a slowdown, these slowdowns never last for more than 2-3 quarters. And after the slowdown, you see a massive bounce back. So we're hoping that will happen this year as well. The company's cash rich. We can afford to invest. So even if the margins take a hit in the short run, we'll continue to invest, and that will only happen if Naukri growth slows down to less than 15% this year.
Anticipating a slowdown in Naukri, is that what you're saying, Hitesh?
Certainly in the first half. Certainly the first half of this year will not be very, very good. And like in Q4, our billing rate growth in Naukri slowed down to around 13.5%. And it may slow down further for a quarter or so. But we are expecting a bounce back in the second half.
I mean, it's quite interesting, and I really want to understand this, Hitesh. I mean, I understand that it's a wave of mass layoffs that we're seeing, not just in India, but across the world. I mean, I would imagine people would go seek the Naukri portal even more, right?
No, absolutely, you're right. Our job seeker traffic continues to be very, very high. And we are acquiring more users than earlier and without having to spend a lot of money on marketing. But we make our money from businesses and not job seekers. And the truth is that IT hiring at Indian IT services companies has slowed down. We are seeing reasonable hiring still with captives. Hiring at startups has slowed down, and that's where we make our revenue. The revenue from that's how we monetize companies, not job seekers.
So we understand that, but Hitesh, just trying to scratch that point further to get a better understanding, because Naukri, of course, is the mainstay. When you say there's going to be slower growth in the first half of the year, are you hinting at maybe a low single-digit growth? Could it be 5 to 10%? We're just trying to understand, because that's what the big kicker is in terms of the operating leverage.
Hard for me to say, because see, a lot of our billing happens in the third month of a quarter, right? Like we have a lot of subscriptions and accounts that are due for renewal, and the renewals happen at quarter end, and companies take a call at that point in time. See, our revenue growth may not slow down that much because we collect money in advance, and we already have a lot of deferred revenue on our balance sheet. But what I'm referring to is billing growth, right? Billing growth may slow down a little from here on as well for a few months till the IT hiring market bounces back.
About the Naukri business, but talk to us about Jeevan Saathi as well. Yes, maybe the losses have narrowed, but in terms of the performance, it's not very impressive because the billings for the quarter showed another decline of 27% on a year-on-year basis.
So that's a planned decline because we changed our model on Jeevan Saathi last year. We went freemium. A lot of the services that were paid for on Jeevan Saathi are now available for free. And we did that to acquire users and acquire market share. On that front, we are trending very well. Our traffic has grown, our monthly active user base has grown. The number of matches we are enabling on the platform has grown substantially over last year. As a result of this new model, we have managed to bring down our marketing expenditure because our cost of acquiring users has come down because they're attracted by the freemium proposition. So this was a planned shift. Now, hopefully this year we grow over last year because now the base is much lower. And burn in Jeevan Saathi should also go down with every subsequent quarter.
Jeevan Saathi should go down. And just coming back to the Naukri business, I understand 125,000 unique customer with a ARPU of 110K. What could these numbers look like in FY24, broad sense?
Like I said, see, the non-IT hiring market continues to be rock solid. Sectors like banking, financial services, insurance, healthcare, engineering, construction, real estate. There's a lot of hiring happening in these sectors, and we are likely to acquire a lot of customers in these sectors. We are likely to also expand to more cities. Currently, we have operations in, let's say, about 45, 50 cities. We plan to grow the number of cities where we have physical presence in the months to come. So we should be able to acquire a lot of customers in the non-IT segments. But it's hard to say what's going to happen in IT. So ARPU should, if we are able to grow at 15% next year, this year, then ARPU should continue to get better. But on the other hand, if growth slows down and we end up with single-digit growth in Naukri billings this year, then of course ARPU will not grow much.
Then your company, you are giving us a color on what IT sector's performance is going to be in the next few quarters. And that's not a rosy picture you're painting.
Well, let me tell you, in the past, these slowdowns have never lasted more than 2-3 quarters. And in the end, India is the solution. So when companies cut costs in the US, they outsource more jobs to India. That's what happened. What's happened every time in the past has been a slowdown. I hope that plays out this time as well.
Investor, what's your take on Zomato's performance? I know you're not directly involved in the business. We hear that every time. But at least as an investor, you're happy with the performance, the trajectory they are taking?
No, we are happy with the trajectory of in both Zomato and Policy Bazaar. They are trending along nicely. The results are better than at least our expectations. And both the companies are trying to get to break even as quickly as possible. So we are pretty happy with their performance.
To stay in them, or you're looking at some sort of exit anytime soon?
That's not being discussed right now. We think these are solid sort of companies to stay invested in. But who knows what's going to happen a year from now. But right now, we're not looking to exit any of these companies.
Hitesh, we'll let you go on that note. Thanks for as candidly as you could answer all of our questions. Good chatting with you.
Thank you.
Okay, that's the word coming in from Hitesh Oberoi. By the way, not just Info Edge, look at the Nifty. We managed to hit that 18,500 mark, and this is definitely a 2023 high. We'll take a very quick break, but when we come back, we'll have our chartists as well as fundamental experts join in and analyze the market mood. Back with closing trades right here on 18 hour. The closing trades are powering ahead further as we speak right now. We managed to scale all the way to that 18,500 mark. In fact, if you look at the Nifty futures, day one of the new series, and we're sitting at a good 156 points up in the green for the Nifty futures, well above the 18,005K mark right now. In the meantime, Sun Pharma's numbers just got the pat in front of you, and that looks like a beat. 1980 crore rupees is what they've posted. 1854 thereabouts is what we were penciling in. So that definitely is a beat. You can see that stock as well react to those numbers. While we await more numbers on Sun Pharma and perhaps get a researcher as well quickly mic'd up to analyze those numbers, let me quickly take it across to Mr. M.K. Dhanuka as well from Dhanuka Agritech and analyze how their performance was. Mr. Dhanuka, great to have you on ET now, and I can see it's a strong performance across the board. Help us understand what really aided your performance this time.
Actually, the marketing team worked on the focus product, the main products where the margins are higher, and that is the reason that the cost of the product is also higher. So we got the growth both in revenue as well as in the PAT.
A volume growth of 8% in FY23, a 7% price growth, that totaled to almost 15-20% growth on the top line in the year gone by. Going forward, what is the volume growth and price growth you're expecting?
Next year, we are expecting double-digit growth in volume, and the value growth will be 2% lower than the volume growth because the prices are at declining trend. So that's why the volume will be higher and the value-wise it will be lower.
As we understand, you've now forayed into agri-biologicals as well, and you've launched 3 products as well. Help us understand what's the product pipeline looking like and what is this new foray all about?
Gradually, the global requirements is for the bio products and the sales for these molecules is increasing. So that's why Dhanuka entered into this field, because in times to come, like the spray is happening through drones. So Dhanuka entered with a drone company, alignment partnership kind of equity investment. So similarly in bio we have entered, and we have also established our export division. So these 2 divisions we hope will contribute in the top line and bottom line in times to come. It will take some time to establish these both the fields, but once they are established, then definitely they will contribute.
We let you go. Gross margin between 35 to 36% and an EBITDA margin improvement of 50 to 100 basis point versus FY23. Is that a fair assessment for FY24?
Yeah, we expect around 100 bips improvement in the EBITDA margin in the current financial year, and we expect double-digit growth in the top line.
Let you go, Mr. Dhanuka. In the meantime, I want to address the earnings of Sun Pharma because that stock is reacting quite positively. And the reason is there's a big beat of almost 200 crores coming in on the bottom line. Doesn't seem to be completely coming in from the top line because it's just higher by around 100 crores versus our expectation. So looks like there is going to be a margin improvement that the street was expecting, and it's going to be probably better than that because I understand there's a one-time exceptional loss as well. So if you add that back, the profit figure should be even better than what the headline number is looking like. So again, coming in now of almost 1.4% as far as Sun Pharma is concerned. I don't have any other details in terms of the various segments or how the various geographies have performed, but the launch pipeline is something that we wanted to watch out for, plus the fact what is the impact of halal inspection. But for now, at least it's not showing in the numbers. The stock holding up comfortably with a gain of around 1.5%, Aisha.
Yeah, absolutely. And you can see that stock price reaction as well come by, and a big move coming in there in Sun Pharma as we speak right now. But we will get our researcher as well mic'd up very quickly and get in some more details there. For the market though, you have to say that it's Reliance really single-handedly lifting the Nifty up. It's a solid almost 3% move that you're seeing on Reliance futures as we speak right now. If we can bring up that intraday graph for you, 25.26 on Reliance futures as we speak right now. The other big contributor, of course, is ICICI Bank today. That stock holding up 1.25%. TCS is holding very strong, as is SBI. So it's these bunch of names which are really lifting the market mood up. Jonathan Shizell as well on the show right now. Jonathan, in the thick of earnings, apologies for coming to you a little late, but just wanted to understand what's the India market construct looking like. And by the way, we just hit a fresh high on the index for 2023, Jonathan. Okay, we will get to Jonathan in just a bit from now, but see Rudramurthy as well on the show. Rudramurthy, 18,500 and well past that level on the Nifty futures. What next on the cards?
Aisha, for sure, we have to see Nifty touching that all-time higher levels much sooner than what one might think or expect. I feel I won't be surprised next week itself, we might see that dash towards 18,800 to that 18,900 range, and Bank Nifty should reach its all-time high much higher and much faster compared to that of Nifty. Definitely, yes, there is support from Reliance for Nifty, and also if you see Bank Nifty, even PSU banks like SBI, and even you have Kotak Bank and the other ones also just supporting. So for me, it is just a matter of time, and much sooner than later, we should see all-time highs first in Bank Nifty and then in Nifty.
That's a view coming in as far as Nifty is concerned. Naresh, what's your stance on FMCG index, auto index? They're also scaling fresh highs.
So the FMCG index is doing really well thanks to ITC continuing to hit new highs. We are starting to see some bit of an action even in the other names like Tata Consumer has given a breakout today. If we sustain 2700, even Hindustan Unilever would be a breakout. So out here, apart from ITC, the other names are not with a similar chart hitting all-time highs. Most of them are coming out of a 2-3 year period of downturn or sideways period. So for now, I'll be a little more cautious on the FMCG pack. We'll focus more stock specific. But if you go to auto, it is very interesting. We've gone through the phase of Mahindra & Mahindra being a leader. But now Mahindra & Mahindra TVS Motors, which still continues to knock highs, but we could be getting into new leadership. We've seen Bajaj Auto make a new all-time high. So that's a fresh breakout which has happened and has continued to do well. The dark horse could be Hero MotoCorp, where in the last 5, 7, 8 years return has been zero. But that sustaining and showing relative strength over the last 1 month is a strong thing. So for now, Hero MotoCorp looks the most interesting one at 2700 levels, and Tata Motors used to be a buy on dips.
Okay, so those are the top takes coming in from the auto and the FMCG index. But Rudra, if I had to ask you with respect to the stocks that are buzzing around, a lot of names actually sitting at 52-week highs. What are the names that look interesting to you? What are the top buy recommendations that you could make for our viewers at this point of time?
See, even last time I was just sure that yes, market will definitely break this congestion zone of 18,500 and we should meet that all-time higher levels very soon. I feel IT now as a pack has started moving up, and even fundamentally the pain in IT is just getting over, and interest rates coming down will be very good. For me, IT will perform very, very good. So especially if I see stocks like, for example, Tech Mahindra holding very strong above those levels of 1100, Wipro having given breakout above levels of 395, sustaining above those crucial zones of even 400, tells to me a lot of leg room is still left for these stocks to go up. So for me, IT will be the sector for the month of June, and I'll be picking up two stocks on my top list from IT will be both Tech Mahindra as well as Wipro. And even if I see specifically other stocks specific, like along with Reliance, even Bharti Airtel has given a clear breakout. So I won't be surprised to see Reliance moving another 80 rupees from current level, and Bharti Airtel also participating the next 80 to 100 rupee kind of a move. So for the month of June, entire F&O series, picking stocks from F&O, I will recommend Bharti Airtel, Reliance from telecom, and also Wipro as well as Tech Mahindra looks very, very strong to me. And even if you pick up stocks like IOC, for example, having given a breakout above 90, sustaining way above those levels, stock is headed towards levels closer to 100, 102. And even if you see BPCL, HPCL, they might also participate. PFC, REC from power sector, DLF having given fabulous results, still sustaining higher level. Tata Motor, even at current levels, looks a great buy. So you have to choose and pick some of these names, and still a lot of leg room is there. And in this parabolic kind of a big...
Right. Thanks, Rudra, for that. In the meantime, just quickly want to flag out a couple of stocks. Pull up the intraday chart of InfoEdge. That's high by as much as 9 to 10%. The numbers just came out. The management told us that the IT hiring is going to be slow over the next couple of quarters, but they're not expecting a big blip as far as the revenue is concerned. And pull up a macro tech developers, i.e. Lodha as well, because that stock too has suddenly spiked 5 to 6%. So looking quite smart as far as a couple of these counters is concerned. But let's talk about the big exclusive that we are bringing for you. Sources tell ET now that Temasek and Tiger Global backed unicorn Open Technologies is likely to launch India's first neobank for MSMEs along with IIFL Finance. My colleague Ajay Sharma is joining us with the exclusive details. Ajay, tell us what you're picking up.
Well, that's correct, Anisha. IIFL Finance is in focus. In fact, it has been in focus last couple of months because of the partnerships and deals which they are doing with their partners. The most recent one which they did with one of the about the housing loan business with one of the sovereign funds. Now we understand next week another big, very important transaction will happen, and this one will be the launch of their first bank for MSMEs. So we understand that Open Technologies, this is Open Technologies is backed by Temasek and Tiger Global, names like that. It's a unicorn, and along with them, they are launching India's first neobank for MSMEs. Now, MSMEs, we all know, is a huge area. Almost $500 billion of credit gap exists there. Almost 65 million MSMEs exist in our country right now. Just about 14-15 have access to credit. It's an area which is very risky and messy as well. But we understand that Open Technologies will be 50% partner. IIFL Finance will be 50% partner. Open Technologies actually specializes in AI, machine learning related technology, which will help them contain the risk. And technology is where this particular association is joined at the hip, because that will, so high growth, big opportunity, and technology will reduce the risk. You remember last time around, Nirmal Jain was on our channel. They had guided for 1 lakh crore of loan book from the current 50-60,000 crore odd. So what this launch will do for IIFL Finances, accelerate towards that loan book guidance, or it may even surpass it, because MSME has been a very large area and a potential area, but it has not been scratched by many in the industry because of the risk it entails. So Open Technologies, the unicorn backed by Tiger and Temasek, will help bridge the gap with the help of AI, machine learning and technology. IIFL Finance with their expertise in the retail side, so high growth opportunity. And we understand that this is likely to happen next week itself. Our sources are saying it will be very meaningful for IIFL Finance as a company. Of course, when we sent out our queries to IIFL Finance, we did not get any response on that. But watch out for IIFL Finance. This is likely to happen next week.
Thanks, Ajay, for that. IIFL Finance is the stock to really watch out for. But what are the closing trades coming in from our technical experts? Naresh, you go first.
So that would be a buy on Gujarat Gas. That's a stock which has gone through a triangle consolidation for quite some time. and is setting up for a breakout move. Today we've seen the first price action, which is positive, testing that 500 mark. This is the third or fourth attempt in the last 2 weeks. So good price volume action today. Sustaining above 500 would be a breakout, which will take it quickly to 550. So Gujarat Gas looks interesting for the short term.
Okay, what about you, Rudramurthy?
I'm picking IOC, which has now closed above those levels of 89 decisively. So I'm looking at initial targets of 100 and then eventually 120 on IOC. Keep a tight stop loss of 87 for the same. And Ambuja Cement is also a buy call. This stock is taking support at around that 415, 416 zone, which has been the breakout zone. So I'm looking at initial targets of 445 and even eventually 480 to 490 possible on Ambuja Cement. Have a tight stop loss of 416 for this long call.
Your info edge, 4,200 plus levels now, 7.5% higher on the future. Z, after that NCLT verdict, 6.5% higher there. Indus Tower, Cummins, HDFC, AMC, these are your big movers from within the broader end of the market. We'll take a very quick break on that note. Lots more lined up on the other side.
Welcome back. Well, apart from the market, which is scaled a fresh 2023 high past the level of 18,500, you have Sun Pharma, which is high by over 3% in the trading session. More details coming in. Apart from the earnings, the India formulation sales is up a good 8.5% on a year-on-year basis. US sales are also high by 10.5%, so a double-digit growth coming in as far as US business is concerned. Global specialty sales has also come in at $244 million, and the emerging market sales have also reported a decent growth at 7.5%. But I think what will be important to track is the fact that US sales has come in double-digit, and the India formulation continues to be between that 8 to 10% range. Gurmeet Chadda also joins us on the show. Gurmeet, I'm not sure whether you track Sun Pharma really closely, but if you do, any sense on the numbers?
Yeah, I've been just seeing it on screen. It looks good to me, considering that all three geographies, which is India formulation, US, and even rest of the world has grown. Rest of the world also is up 7%. I think the specialty side is anyways picking up, and there has been some better performance in if you see the previous quarters, with also the pricing pressure reducing. So we'll have to look at it in more detail, but optically the numbers look good. In fact, pharma in general for this quarter, there have been more positive surprises than the negative ones.
Okay, Gurmeet, glad that you analyzed those numbers for us in a jiffy. But Gurmeet, just the overall pharma space as well, right? Quite a few bottom-up opportunities, I guess even you must be spotting there, if at all you are recommending investing in pharma right now.
No, absolutely. So, so one obviously is the branded generics and play. We saw a good listing even for Mankind Pharma. Other numbers have also been pretty okay. If you see the IPM data, which comes month on month, that's shown improvement. Then there was some recovery in the CDMO, custom synthesis play, with export data. I think March export data was one of the triggers. Though the results have been a mixed bag. So, for example, Newland, Syngene, even Sovin, for example, reported very good numbers. Newland actually made a new high. They talked of 2 more molecules probably getting commercialized from the development stage. And then you had Laurus and Divi's reporting slightly, subpar numbers, but normalization processes. So it was better than previous quarter, but still way off from what we have seen during the COVID high. So I think this business is lumpy. This entire, novel custom synthesis, or in a very simple language, the global pharma outsourcing manufacturing opportunity in my view is pretty huge. And some of these companies have done very high capex. So Laurus has done almost 2,000 crores of capex. Divi's has done last 3 years the capex they have done in probably last 20 years. And some of the results will follow, but it's a lumpy business. You don't know when the molecule gets commercialized. So you got to be in for a long haul, and your risk tolerance has to be high. Also, the hospital segment, in my view, still looks good. I think the occupancy rates, the elective surgeries, the average revenue per occupied bed, all metrics are stacking up nicely. It's more a capital intensive business. That's another space we are tracking.
So a lot of these things that you like in the pharma space, but what about Reliance today, Gurmeet? That's up by a solid 3%. How are you looking at this one?
No, I think it was long due. I mean, it's been a while. It consolidated. To me, I think the one immediate, the earnings were pretty strong. I think the O2C segment did pretty well, while Geo continues and retail continues to get more traction. Also, I think the demerger of Geo Financial Services was another small trigger because the market was valuing it at about 200, 220, the Geo Financial says. I think the bigger play would come when the market, this one concern that, the free cash flow generation will again get, subdued because of the capex they are doing on both Geo as well as on the energy and retail. Just to see that I've actually lost count of how many acquisitions they have done in retail. So that's been one concern that which happened when they did go aggressively. The gross debt crossed 3.5 lakh crores when Geo was in the launch stages. So I think maybe some monetization of the energy business post this demerger of Geo Financial, I think would be one major catalyst market is looking at. And I think probably some settlement on the windfall tax side also, so that you can get more clarity on the earnings. So I think even despite the run-up, Reliance is quite nicely balanced.
Gurmeet, are you as surprised and shocked by the performance of Page Industries as we are?
Yeah, I think the results were a shocker, when stock prices, when they are priced to perfection, and Page has had a great track record. And I remember the IPO came at sub 300, and you are at despite this correction, that it's been a great wealth creator. And that's why you give them 60, 70, 80 multiples. So what has happened in both inner garments as well as athleisure wear, the competitive intensity has gone up. A lot of brands have come up. Page enjoyed a lot of exclusivity. And they are very dominant, especially women innerwear. But the opportunity size is huge. I think the market is moving towards more premiumization. Even the mid-market segment, players like Lux, etc., are also moving in there. So we'll have to probably see whether it's just a one-quarter thing or there's something more structural playing out. So I'll probably wait out for another 1 or 2 quarters and see how they are doing. So they're working on new segments, which is athleisure, the kids segment. Then they're also into Speedo, which is into swimwear. So while the market looks good, we'll have to probably see if there is more competitive intensity, which is impacting both top line and bottom line for them.
Okay, just looking at a couple of buzzers here. Indus Tower, Cummins has been a strong one, has seen a good rebound after that. The day it crashed when the earnings came out and the management set out that guidance. But since then, it's seen a massive rebound. Today as well, it's holding higher by almost about 6% in the futures. Z, after that NCLT relief, that's holding up 7%. And Naukri is the one which is in a tizzy of sorts. Almost an 8% move is what you're seeing on the futures for Naukri. Erstwhile Info Edge, that stock is holding out very, very smartly as we speak right now. Within the large caps, of course, it's Sun Pharma and Reliance. In fact, Sun Pharma has now taken over Reliance as the top performer today, followed, of course, by Hindalco, Divi's, HCL Technologies. They all also are looking good. Rudramurthy, just 2 charts here for you. Z, which is an earnings reaction, or rather a news-based reaction, and Naukri, which is an earnings reaction. Both stocks seeing massive gains today. You'll have to unmute yourself.
Yeah, sorry, Aisha. If I have to pick one of them, I will surely pick Naukri and not Z. Z for me has been a disappointer always. This stock comes to around those levels of around 177, 178, and again goes to those levels of around 210 and again fizzles out. But if you see the medium to longer time frame trend, yes, from those levels of around 270, Z has always corrected and then taken that support at 178 levels. So for me, I will rather prefer Naukri and buy Z once it crosses decisively that hurdle of around 215 to 20 zone. And once it crosses 220, yes, Z looks very attractive. And if I have to look at levels at Info Edge or Naukri, so for me, this stock today, the way it has given that price breakout, it looks to me very, very strong. So I would wait for any small profit booking to come out or any dips to levels closer to, let us say, 4,150, 4,100 will be a great buy. And having gone past 4,000 today, and it will definitely close above those levels, this stock can definitely test its all-time highs very soon, and stock can even go further up from there. So for me, Naukri looks a very good buy. Wait for any dip if you can get at around 4,100, 150 zone, or even at current level, I will buy small quantity and add if I get any dip. And I will look at higher targets of around 4,500 to plus to come soon on Naukri.
That's a take coming in. In the meantime, other stocks which are reacting from the IT and the tech pack. Nuresh, eClerx is doing quite well in the trading session. Nuclear Software, I'm not sure if you track that one, but that's logged in the upper circuit of 20%. Sonata Software is higher by 5%. Coforge is trending higher by 4%. What would you pick as the top bet?
So I would pick eClerx out of them. Nucleus has already gone up 20%, but eClerx is interesting because the stock has gone through a sideways consolidation for the last 1.5 years. And if we look at the last 6 months, it has made same tops around 1530, 1550. Today also we are around that levels, which is a short-term range breakout on cards. And the stock, say 1250, 1300 was the bottom, 1550 is the high. So that gives us a target price of say 1800 in the short term. So at 1530 to 1550, eClerx looks interesting, would keep a stop loss below 1450 and expect a target price of 1800 plus.
Okay, just looking at the charts of Z, given the big relief that one has seen for the Z-Sony merger, the NCLAT, remember, has set aside NCLT order directing NSE as well as BSE to review the grant of NOC. NCLAT has held that as per principles of natural justice, Z should have been heard by NCLT before directing NSE, BSE to review this no objection certificate. That stock, of course, is holding out very, very smartly in trade as we speak right now. But just generally, right now, just looking at the charts of not just Z, but let's see what some of the other media names as well are up to. So even a PVR Inox, for instance, is actually seeing a bit of a gain coming in. There's Sun TV also, which is holding up higher by about almost 1.5% as we speak right now. Naresh, just very quickly on the charts of Z as well as Sun TV, if you're looking at it.
So Z could be a case of a false breakdown. So the last bottom for the stock in February was around 175, 178. Today also we went below, very close to that, and recovered sharply. And this is the price point where it had the whole move had started back in 2021. And now today, after making a gap down, it has recovered really fast. Now in this case, I would wait for much more better confirmation about 195, 200. If it can close about 195, 200, it becomes a case for a reversal. Same is the case with Sun TV and a lot of these media names, which the whole index and the bunch of stocks have continued lower or gone nowhere for almost 2.5 years. And now we are starting to see first action. So Z could be interesting from here. Sun TV 400 has been the base, 550 has been the top. A lot of other names like TV 18, etc. They've all started making recoveries after this sharp crack in near term. So would be positive here. Z could be interesting. Would wait for a further close about 195, 200 to confirm the stance.
Your take on the entire manufacturing sector, if you look at the week gone by, Dixon has been higher by 20%. There's something called an LG equipment, which is up 15%. Cummins has seen quite a bit of comeback after that one-day decline that we have seen. And even other names, the likes of Siemens, etc., CG Power, they're all up anywhere between 10 to 15% in the week gone by. Would you be a buyer despite the run-up on these capex and industrial stocks? Gurmeet, the question is for you.
Yeah. So I think there are pockets we are quite constructive on. One clearly is the defense pocket where there are three things playing out. One is the capex in defense has been in line with the nominal GDP growth. For India, it averages about 2.6, 2.7% of GDP. So if you see last 9 years, it's been about 11-12%. Then there is an import substitution because the government has banned almost 451 components. So we are seeing some uptick coming there because of the import substitution. And third is the nature of the business because the aircrafts, the systems, the artilleries get obsolete and you need to modernize them. So that's another opportunity, which means that the sector, if you pick your things well, can clock 15-18% growth overall sector. And then if you map the value chain well, you can. So there are PSUs which are doing well like HAL. Then you have some mid-cap names which are combination of both explosives as well as defense like solar, and then there are some small cap names. So that's something we like, and I think it is more long term. Electronic manufacturing services, EMS, again, is another long-term opportunity. We've seen very good numbers now from Amber, Dixon, and few more. I think here also probably the mix is changing from OEMs to ODMs because it's a high volume, less margin business. So as the shift changes, probably you'll make better money. And if Apple can source, a few $1 billion, I'm sure a lot of other brands will follow in terms of high precision electronic manufacturing. And then you like the overall, you can play also proxy to manufacturing uptake through, cables and wires because you need more energy, right? So you pick something there. So we like KEI Industries, Polycab, etc. So you play it as a combination, as I said, and pretty constructive here. And I think share of manufacturing to GDP, you will see more improvement as we go forward.
Okay, Gurmeet, just stay right there. I'm just going to come back to you. Let me just get in some BTST trades as well before we wind up for the day as well as the week. Rudra, what's on your list?
So for me, I have picked up IOC for a BTST trade. So buy it at current levels, look at initial targets of 100, stop loss would be 87. And Ambuja can be again picked up for BTST, looking at targets of 445 with a stop loss of 416.
Right. Naresh, what about your BTST ideas?
So that would be a buy on HCL Tech, stop loss at 1120 and a target price of 1180. Second is a buy on Gujarat Gas, looks very promising, setting up for a breakout, stop loss at 488 and a target price of 510.
Okay, that's some BTST trades coming in. I just want to bring up the stock price of InfoEdge, and we were just chatting with Hitesh Oberoi, start of the show about half an hour or rather 1 hour back actually, and he was talking about as to how he is expecting IT hiring is going to slow down for another couple of quarters. Having said that, he very categorically mentioned that he does see improvement come by from the third quarter onwards. Gurmeet, just looking at the price action for IT and more so mid-cap IT, it seems like the worst could be behind because there is some significant buying that we've seen kick in for the last 3 to 4 weeks.
Yeah, so some of it could be value buying, and I think my personal view is there is too much stress on generative AI. So for example, if you see the recent deal of TCS with Google on generative AI, they've added 40,000 people for data feeding. And since this is a self-learning system, you need to continuously feed. So maybe 2-3 years down the line, the system will get evolved. And then you again need, the application. So one is the technology part of it. Second is the application part of it, which is where our companies fit in. Mphasis launched a platform called Topaz, which is their generative AI. So I think there could be short-term disruption. And, it's quite possible. We saw that with Metaverse last year. I remember Y2K when we were doing our MBAs, right? Everything was going to crash. So I think effectively the use of technology and digitization will only go up. My view is it's better to wait it out for a quarter or two. There are more opportunities in the market, but in terms of negativity, probably a lot of it is in the price.
Right, fair point. Okay, that's the take coming in on the IT sector. But let's begin winding up for the day as well as the week. Gurmeet, glad that you could take time out and join in. Thanks for joining in as always. Just quickly mark out what the cues for next week as well are looking like. And when it comes to India, you've got the GDP as well as the fiscal deficit number that's going to be released on May 31st. Having said that, couple of data points coming in from the US geography as well. Remember, US markets are going to be closed on May 29th for the Memorial Day holiday. There's consumer confidence data, the US manufacturing PMI, as well as the initial jobless claims as well, which are going to be released. And then, of course, you've got Apollo Hospitals, Dani Ports, which are also due to report their numbers come next week. But let's begin winding up, and what a fabulous day it has been. Start of the June series, and you managed to hit fresh 2023 high for the index, and the Nifty has managed to scale up about 1.6% in the week gone by. 43 out of the 50 Nifty index constituents have managed to advance. It was Adani Enterprises clearly which actually led from the front. Divis as well. They were the stocks which were also leading. And by the way, it's not just Nifty, but the Nifty Midcap100, that has managed to hit an all-time high this week. Dixon Technologies, Balkrishna Industries, these have been the high flyers from amidst that. Even the small cap index has managed an advance for a 9th straight week now. So Medplus Health, Suzlon, these have all been extreme winners. While metals, of course, were lagged. Actually, they've snapped their 2-week losing streak. It was indeed the top sectoral winner, so that saw some rebound coming in. In fact, the index managed to gain about 5.5% this week, with Vedanta actually leading the gains. Similar was the move across IT, persistent Wipro-led. FMCG as well hit an all-time high. Varun Beverages, ITC were the standout performers there. Pharma also snapped its 3-week losing streak. Auto index also hit an all-time high. So quite a bit of buoyancy is what you've seen across the board pretty much. Even banks held out. So was the case with PSU banks also in particular. Realty index as well on a net basis along with autos has had a good performance for itself. For the day, of course, your clear stars have got to be Sun Pharma reacting to its numbers, which were a beat. And then, of course, Reliance Industries, which held out by 3%. Has been a bit of a stretch, the consolidation on Reliance. And finally, you saw a big move come by today. ICICI Bank, Divi's, and of course there was Tata Steel, Wipro, etc. as well, which were contributors to today's move. TCS Maruti as well in tow. But amidst the broader market, which was also equally lively, if not more, Naukri, Z, Indus Tower, HDFC AMC, Cummins, they were all big winners. But the day doesn't go down without its fair share of losers as well. So ONGC ahead of its numbers, 1.7% lower there. Glenmark cracked about 2.5%. BHEL saw a dip of about 3.5%. And then Page has got to be the biggest disappointment today. 9.25% low on Page Futures is where it's shutting shop for the day. But fabulous session, fabulous day, 164 points higher, 18,584 no less on the Nifty Futures. We'll wind it up then in this edition of Closing Trades.